Okay, what the hell is going on with the stock market? Today, we're going to be talking about that. So, what is going on? It seems like there's been quite a few companies who have had great earning calls, and yet their stocks are going down. Meanwhile, companies like Sundial, GameStop, AMC, all of these companies are skyrocketing through the roof. Okay, maybe not so much Sundial today, but I'll get to that one later. If not in another video, but I'm going to get to that for sure a little bit later. So what is going on, and why do I think that there's going to be a small blip, maybe a 10 to 15% dip in February of this year? Well, let's get down to it. What we really need to know about is, how does short selling work? Just a really quick explanation of what short selling really is basically, let's say I want to short GameStop. Basically what I would do is I would hypothetically borrow a share of GameStop from somebody else. Now, when I borrow this, I would be paying an interest, and recently the interest was over 100% a year, which is confusing to me why they have 130-something% of shares that are shorted, which is more than what are even shares on the market. And then I would take that share, I'd be paying interest on it, but then I would sell it to somebody in hopes that the stock price goes down. Because if you sell it at $100, let's say, and it goes down to $50, now I profit that $50, and now when I buy it back at $50, I can give it back to my broker or whoever had that share. I keep the $50, I give them the $50, and everything is all set. However, when this trade goes backwards is basically what we've been seeing with GameStop recently. And that is, I basically borrowed a share, not me, but people, at $10, let's just say hypothetically $10, and then I pass off that share to somebody else and I sell it to them at $10. Well, now the stock is worth $300. So what do I need to do to be able to cover that? Because now I've got a broker who's bitching at me to say, hey, I want my shares back. Meanwhile, I don't have shares. I sold them. So now I need to buy them back. Well, now at this point, if I have to buy them back at $300, that's a $290 difference from where I sold it from, which means that now I need to somehow find money to be able to cover that trade, times however many shares I did this with. So now, I finally get it back, my broker person or whoever is happy. I'm not so happy, I just lost a killing, and that person's happy because they just sold me something that they probably paid $10 for. So now I'm upset, but that is what's going on. Let me explain. Basically, all of these hedge funds shorted GameStop. They're shorting a lot of different stocks. They've shorted Tesla in the past. They're shorting a lot of companies. Some of the top right now is Virgin Galactic, GameStop, AMC, Sundial, Aurora Cannabis, a whole whack load. Now, in another video coming out very soon is my plays for February as well that are not dividend related. But this is what's happening right now in the stock market. Basically, these hedge funds have to raise money somehow. There's three ways of raising money. They can borrow billions of dollars to pay off their shorts. They can sell the stock that they already own for a long position, which means that they bought the stock and they hold like Apple and things like that. And they need to sell that stock to be able to have funds to buy back their shorts. Or just to pay off the interest to that person who's making money off of me in this case. And then, on top of it all, what's happening is the third one, where broker or whoever I borrowed the funds from gets upset. They no longer want to deal with me, which means that they will cover the short themselves at my expense, which means that I now owe them whatever kind of money that they get for it. And I'm going to tell you right now, they do not care how much they buy it back at. They don't. For all they care, they could go to the stock market and literally say, I don't care who's willing to pay what for this GameStop stock. I don't care. And that's when you start seeing $300, $400, $500, potentially next week $600, $700, $800, $900, $1,000. Who knows? Now, these shorts are still not covering their shorts. That's what's happening in the market right now. A lot of them are still not covering. It used to be 138%, which is 38% more shares on the market more than what is currently available. And then, on top of it, now it's only 120%. So now there's still 20% more out there. If these brokers and these people start getting upset, guess what? The stock market is going to plummet because these hedge funds are going to have to sell Apples, TDs, banks, Bank of America, anything that they have that is in a long position that they can sell to just raise capital somehow, they're going to be selling. So that person's happy, they're not going to be happy, but us retail investors, we are going to be happier than all hell. Because if you can make a good deal right now, I'm not saying to go out and speculate. What I'm saying is to do your research. Find a company that if it does go down, then you're still okay holding long. How I'm personally playing this is I've got a few long positions and I've in a couple of companies that are currently being targeted by these Reddit people. And I had them before all of this frenzy. So I'm already happy with what's happening. However, how I'm playing this volume, this market volume from these Reddit traders and the potentials of what's happening, I've placed a couple of call options on Sundial. That's how I'm personally running this. Now I'd like to know how you're running it. Comment below. I'll see you guys again in my next video.